And we're live. Content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance references historical, and there is no guarantee of future results. All indices are unmanaged, may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted. There can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, a member of FINRA and SIPC, and investment advice is offered through Gimbal Financial, a registered investment advisor and separate entity from LPL Financial. Good morning.
What is going on?
You know what? I have a confession to make.
Is this the right place?
It said this is being recorded.
This
Exactly.
is a safe place.
Debbie reminded me, or brought to my attention this week, that the email never got sent last week. It was queued up to go, but never sent. And so if you missed it, which most of you did, this might be the first webinar of 2022 for most of you, even though it technically was last week.
Very,
welcome.
very good. Very
Well,
good.
welcome everyone to
Welcome,
2022. So check this out. I'll tell you one thing. If things keep going the way they are, it's going to be impossible to buy a week's worth of groceries for $20. That was a comment from a newspaper in the year 1957. And there's all kinds of things like this. You could probably Google back, like just inflation comments or something like that, you know, from whatever decade or year you want to pick. But a good friend sent me that. I thought that was pretty interesting. $20. I hate to tell you what the Shreves spend on groceries as we buy like organic turkey and stuff like that. And vitamins that I think work. Yeah, $20 wouldn't go too far to Shreve House.
I've lost track of what a bag. I used to know what a bag of groceries. That's how I would measure it. It's like how many bags of groceries we got. For a while, I think it was $20 for a bag. And when we had the whole crew, there were a lot of bags of groceries coming into the Tyner house.
Oh man, yeah.
Well, inflation is real. It's not transitory. I'd say that.
Yeah, I can't grasp what that concept means. You've thought about that? The transitory, the word, like, is it just like pushing the buck, or what is this?
I am a man of a few pet peeves. One of them is excuses. And I've heard like an excuse is a lie wrapped up in a, a pretty bow. And I think instead of admitting, yes, there is inflation because of our decisions, the Federal Reserve just said we're going to call it transitory. But like, if you study history, if you turn on the printing press like they did,
Yeah.
The only transitory thing is if you turn off the printing press and start taking the money out of the system, for which they, that thing, their work together with the government, all the spending it's legit. So
I don't really watch TV. The Shreve fam's addicted to sports, and any of my news comes from probably the Investors Business Daily, and then articles friends send along the way. But the CPI index, that might be something. If you're watching CNN or Fox News or something like that, they might even have CPI or CPI, the Consumer Price Index. They might have that like flashing across the screen these days. And all that is, that's a measurement of goods and services. And that CPI index, my friend Brad let me know that, from this time last year, it's up 7.1%, which is the highest spike since 1982. I mean, back in 1982, Keith was thinking about buying a Z28. I don't know what you're thinking about today, but whatever you're thinking about today has gone up quite a bit.
Yeah, we really haven't been in inflationary times during a lot of our listeners' lifetimes, and our younger ones anyway. And so it doesn't mean much to just say you're in inflationary times. We're the people that are taxed. Inflation is a government tax, in case you don't know that the inflationary policies are led by the government, and it's a tax on the most vulnerable people in our culture. It's a tax on the elderly, and it's a tax on the lower income people, because it eats up a larger percentage of their income. And so it's a diabolical tax, is what I would say about inflation. So I saw how it worked in the 1980s and in the 70s, and it wasn't a good thing. It was dangerous.
Yeah. Well, you know, like Keith said, I mean, I haven't really seen this. And so would love to talk about your personal experiences with folks who have experienced a mortgage in the 80s or thought about buying a car in the 80s. I'd just be curious what life was like for you then.
I mean, inflation violates one of my kind of core financial principles, is to live debt-free living. Inflation, if you're trying to maximize wealth, would say borrow as much money as you can and pay it back with inflated dollars, is what it says. So it kind of, you know, it's not my core principle, but that's who it benefits. If you're going to borrow money, now's the time to do it. So.
Yeah, and that's a great example. And again, our friend Brad, who's a marketing strategist at a major mutual fund financial institution in New York City, he was saying that going forward, as you look at stocks and look at companies, the ones whose balance sheets are clean, those would be good places to look, because they won't have that baggage of extra debt owed. It's like training and running with a parachute on. Just slows you down.
Yeah, the interest rates, where that'll become a trying to get it up on my screen here, but it's all fun and games until you have to pay the higher interest rates from inflation. And so our federal government, the politicians, if they're not planning on being in office when the bill comes due, then they can blame it on the new guys or the new gals that are in place. But it definitely is gonna, you know, it'll cause a lot of pressure on the system for the future generations. It's the Amandas and Erics of the world. So it's an unfortunate thing. See if I can get this full screen here and share this with you. Yeah, so here is a picture of one of the key things going on out there. This is the 10-year Treasury. It's quoted, this price up here is the yield or the interest rate you get off the 10-year Treasury. I would imagine this is a 5-day. Let's do a 1 year. Yeah, so here back in March 31st of last year, the 10-year Treasury was paying 175 basically. It dropped all the way through the summer to about 117, but over here in January a year ago, you could buy a 10-year Treasury and they pay you 1% a year. And
it's pretty rough.
Yeah, and so imagine 7%. If you bought that and you've got 7% inflation, you're losing 6% every year on your money
on a 10-year investment
on a U.S. Treasury. And so it's gone up 75% from there to 1.75%. And what you as investors just need to keep in mind is that when you own bonds, their value goes in general, not always, in general, it goes the opposite direction of interest rates. And the evidence seems to be saying that interest rates are going higher.
So interest rates up, bond prices down.
There you go. There you go.
Yeah.
What else we need to talk about?
Well, you know, it is interesting. You look at a fixed investment like the Treasury, and you wouldn't want to park there for long term. There are some short term reasons to have conservative assets. Maybe those are shelter in place when things are looking a little squirrely. And speaking of which, is this chart up?
We'll bring it up.
This is the NASDAQ.
Well, before I go there, let me show you all this. I've been showing you all this for a number of weeks. I started this back in, let me see down here when I started this thing. See my cursor.
Keith is the king of consistency. It's one of Keith's attributes that I like the best. You're the best, boss.
Oh. There'll be a little something for you in your paycheck there.
The consistent, and you have been doing this a while, and it's been interesting to see what's coming out. It does tell a story of where capital is flowing.
So what we have here is we started it back in August, and we put in this left column the number of stocks on our MarketSmith software. MarketSmith is readily available. It's historical data, and it's not predictive of anything. It's simply a way that we can show what is going on and what has gone on. So that in August, there were 8,950 stocks in our database. Today, there are 9,441, which happens in a rising market. As the market goes up, companies look themselves in the mirror and think, you know what, I think we can get top dollar in this market, so we're going to bring our business public. So about 500 companies have gone public since we started, or at least have been added to our database since we started this process. And then what I show here is the shorter term moving average. That's the 21-day moving average. How many of those 9,441 companies are below their 21-day or shorter term moving average? And it's 5,277 as of this morning. The 50 days, a little bit longer, more medium term, and 5,600 of those. And then the longer term is, what are we doing in the long-term trend here? And 4,600 of those are below their 200-day moving average. And it's the most significant we saw was a few weeks ago, right before Christmas. 4,800 of the of the total stocks were below their 200-day moving average. And what that does, and now I can switch over here to the NASDAQ, and on the NASDAQ here, this black line. Do you see the black line, Amanda?
Yep.
The black line is the 200-day, the longer term trend line. The red is the 50-day, and this green is the 21-day moving average. And so a large percentage of the NASDAQ stocks are below their 200-day moving average. Right now, we saw this day last week, the 5th, where the NASDAQ just got smacked in the face, dropped below the red line, the 50-day on pretty good volume. And then a couple days later on the 7th, it dropped tentatively below the 200-day, and then that it forms a little bit of a T. I don't know if y'all can see that on your screen, but what that tells you is at the end of the day, buyers came back into the NASDAQ type stocks trying to buy the dip and pushed it back up. And then again, this week it reversed back down to the 200-day average. And it's just amazing, like, to see that blue line landed exactly on the black line and is trying to work its way up. So that's what's going on in the NASDAQ.
Would you say that's fairly common when there's rotation happening to see a moving average get hit and then challenged and stay tight towards the moving average?
I would say that most institutional investors are not honest in their public expression of what they think about the market, because it's like a poker hand. If I was playing y'all in a game of poker, they wear sunglasses so you can't see their eyes, right? Like they don't wear sunglasses because it's too bright in the room, as they're trying to keep from showing anything, any inclination of what they're trying to do. And institutional investors aren't going to tell you what they're going to do before they do it. They want to make their moves, and then they'll be happy to talk about their moves after they've done it. So what these averages indicate is what large institutions are thinking at that instant. And at that instant, they were wanting to reallocate their portfolios and get some NASDAQ stocks back in there. And so I long ago quit listening to what Warren Buffett said, because that's one of the first people that I learned is like, Warren isn't going to tell you what he's doing until he's already done it, right? And so you can chase after him, or you could just buy a stock, is kind of my attitude towards that. But to listen to try to act from what an institution is doing, is that they're not going to tell you straight up what they're doing. So that's what's happening here. And then if you see the S&P 500, it's been a lot stronger than the NASDAQ.
Yeah,
it has maintained. It's right around the 50-day moving average, but it's not even come close, other than a couple times to this 200-day. And let me try to draw a line here, temporary line pin from here.
And the S&P would have several different types of stocks in it that, may be a little bit more dividend focused or not quite as high growth focused. And those types of stocks normally do pretty well when there's rate hikes on the horizon.
Well, and what you can see is I just connected the dots of some lows here, and you can see this trend line on the bottoms has been holding up pretty well. It's actually testing it today and trying to bounce back up off of that, and we'll see. I mean, the market is it's got some challenges going on right now, and a lot of stocks have had a rough way about it. Let me go over again. None of these stocks are recommendations. We're just pointing out historically what's going on. I think probably like 30% of the indices, any of the indices you look at are called weighted indexes, and they are, what it means is that if you have 500 stocks in the S&P 500, they're not all 1/500th of the value of S&P 500. I think 25 stocks represent 40% of the S&P 500's value. So what happens to those 25 stocks is a big deal.
Oh, yeah.
And they call it the FANG or FANGMA. And these are just a quick glimpse of those stocks. Facebook became Meta Platforms a few weeks ago. They're down below their 200-day moving average. It's having a little bit of a rebound today. Apple is holding its 50-day moving average fine. Amazon is below the 200-day. Netflix was doing well a few weeks ago, and it's just got smacked here lately. Google is trying to hold the 200-day. It bounced off it a few days ago. Microsoft is heading towards the 200-day moving average, and there you have it. Those are so those stocks, with all the rotation that's been going on, Doug, those stocks have held up pretty strong over the last year. If that shifts, then we might see the S&P 500 and the NASDAQ having some more challenges.
Yeah. Can we pull up the S&P 600?
Yep.
S&P 600, you've heard us talk about this one time and time again. These are smaller companies, medium-sized companies, and you can see just real clear, just going across. This has pretty much, it's done nothing for how long, Keith? We're going back
almost a year here. This goes back until last March.
Back a year. And so this is an interesting place on our radar, just like the others. But this one's on our radar to see, how are smaller companies being impacted by thoughts of rate hikes coming up. And this one just hasn't moved like the S&P or the NASDAQ. And same could be said if you looked at emerging markets or even foreign markets as well. They haven't been able to keep up with the big companies like the FANG stocks.
It is interesting to see. I looked at it a couple of days ago. I don't know if I can get it up here real quickly or not.
If you've got those in your portfolio and want to talk about them, give me a call. It's a pretty hot topic right now, and I'd be happy to share a little more detail, one-on-one about those.
Which ones did I got?
About the small companies.
Oh, okay. Yeah. And really, if you've got any individual stocks that you are curious about, I think we'd be happy to talk to you about those and kind of help you make some decisions on there. What we've tried to point out is that incremental decisions where you're making small decisions rather than an all or nothing decision kind of helps break the emotions and psychology out of it. And a lot of times that old Kenny Rogers song, you got to know when to hold them and when to fold them and when to walk away and when to run. If you've got too much of your personal capital in a single stock, it can do really some health problems for you in a declining market. So the time to consider that is not when they are sloping down.
We've been through the emotions of markets like this, and I know you have too, but managing other people's money and the emotions of different stock markets. We'll be happy to share, the war stories. But what they have done is they've created process and resolve for us, and we'd love for you to know that stuff too.
Yeah, What else you got, Doug? I'll look for this on while you're kind of covering some thoughts you have, and maybe I can point this out before the show's over.
Yeah, I think my main thought of the day was just thinking through what does it look like with inflation on the rise and on the uptick, and some of my friends hear me talk about the F-150 index. Yeah, I've always loved the Ford F-150. I just think they're cool. And the rising cost of a Ford F-150 is just unbelievable right now. I don't know how, I see them driving around town, but I don't know how anybody affords these things. And so the just inflationary pressures on the market will be interesting. But I don't think they'll be detrimental to success, just because America is the best, the most innovative place to take a risk and start new things. And so with that, and that's just what it is. And it's our policies in place. And because those policies are in place, the risk taker is still rewarded. And even with interest rates ticking up, and they're going to tick up maybe 3 times in 2022, maybe 4 times in the next year, historically, we still see rising markets during those early inflationary increases. So I'm not down on it, but I think now is a great time to just reevaluate your risk and take a snapshot and say, okay, here's where we are. Where do we want to be 2, 3, 6 months from now?
And I think there's reason to remain. I think maybe the tone of what we're saying about the market is that it's a little risky right now, but I don't know that that means you need to freak out and run.
No,
because usually the market cycles have right around the 4th or the 5th Fed Reserve interest rate hike is when the market has peaked out and started its bear market run. And so we still have, I think, time on this bull market. It's just a matter of not being complacent in a time of which there is some risk out there.
Yeah, I'd say especially on the bond side, like we talked about.
Yeah. So this is what I was looking for here.
Are you on the paper?
Yeah, I'm on the newspaper.
So can I just give a quick plug for this? So this is the Investors Business Daily.
I'm not sharing the screen. I can't.
Oh, okay. Sorry. Okay. Keep what he's looking at is a newspaper, and I love this paper. I once heard William O'Neill, who started this company, talk about it, and he had a vision to compete against the Wall Street Journal, and so the Wall Street Journal at the time, it was the only really widely published paper on investments, and he wanted to dive in and even make it better. And so just that creative genius, where a guy from Kansas or somewhere,
he went to SMU in Dallas for college. So
I can't remember where he grew up.
Yeah,
But the point is people taking risks, taking chances, and taking on big projects. And this was one of them that's greatly influenced Gimbal Financial.
Yeah, and what all I was looking at is they prefer individual securities, and that's the method behind their madness. But they also put together their IBD mutual fund index. We're showing you the S&P 500 index. This is a readily available index, and it basically they picked who they thought were the best of the best mutual funds to give them a flavor for what's really going on growth oriented mutual funds. And you can kind of see going all the way back to July that this index has been flat. And the thing that I was pointing out here is this line below the index shows you how are the mutual funds in that index doing relative to the S&P 500. And basically mutual funds are underperforming the S&P 500 right now, which may be a long-term thing, it may not. But I think that just points out that even though 2021 was a good year for the indices, it may not have been a great year for every investment class, because it's been rough out there for probably since March of last year when we were looking at that S&P 600 index. And when that thing peaked out, it just, a lot of stocks started trading sideways. Kathy Woods is a relatively famous fund manager and had one of the best funds a couple of years ago. And I think her fund is down 50% from its high, which that would sure cause a professional, if the indices are hitting new highs or close to those new highs and your account's down 50%, you probably have some self-esteem issues when you get up every morning.
And those, in her fund, those are just, there's rotation happening.
Yeah.
There's stocks that did really well, they've reversed. Got to find new leaders.
One of the things on a different topic, I was thinking, and it doesn't have to be all about me, but this will be about me. So 6 years ago this weekend, I was in a very bad car accident. I was stopped at a stoplight on State Road 37, which that stoplight's not there anymore. I don't even know if that hill is there anymore. I think they're putting a new I-69 in. And I was dead stopped. The car hit me probably going 50 to 70 miles an hour. Miraculously, I'm here today. But why I bring that up is it's in my psyche that it's that time of the year. But one of the things as important to paying attention to as the market is your overall financial plan. And there are risks that a lot of people don't talk about that you need to pay attention to, and we're happy to talk to you about that. But the Insurance Institute, I forget what it's called. I'll put it in the anchor next month. You can read about it. But over 12.5% of the people on average on the road are uninsured. That means when they get pulled over, they don't have an insurance card to give the policeman.
Yeah, they're not underinsured.
They're uninsured.
Flat out.
And there's an unknown percentage of those people who are underinsured. And underinsured doesn't mean that they don't hit the state limit. The state limit is underinsured.
The state limit is underinsured. That's,
yes. Yeah.
Right.
So imagine I get hit from a standstill from somebody going 60 or 70 miles an hour. I didn't even know what happened. I didn't even see him in my rear mirror. I didn't know what happened. My head whips in the hospital. Whole deal, and the damage of that went on for months. I was having migraines and things of that nature, and they had the state minimum coverage. And so what protected myself and my family was how we had our automobile insurance and homeowners insurance structured. And part of what you can get is uninsured, underinsured motorist coverage, and that motorist coverage needs to be something more substantial because I think the state minimum is like $25,000 bodily injury. I don't know if you've been to a hospital lately, but it doesn't take much to blow through that. And so if your agent is not helping you think through that decision, I would push hard on them. I would include an umbrella policy. And that umbrella policy has to include the uninsured, underinsured to stretch the coverage that you have on your own policy.
The majority of the people that we've met with, oh yes, Keith, we've got an umbrella policy. I mean, almost everyone has an umbrella policy, but like Keith's saying, make sure it's an attachment to your motorist coverage because your insurance agent might not even know that. There are several big firms that won't even allow it. And so it might mean that you have to make a change.
Yeah. And so a couple lessons that I learned from that was make sure that's in place, which it was for us. I don't have any ill will towards the person that hit me, but I think rear end collisions are very dangerous. And they're more prevalent because of the texting or distracted drivers out there. And that's the only thing I can imagine as the fellow was texting. But and then if you're in an accident like that, you need to go to the hospital. You need to have a baseline established on your health situation, even though you think it was just a small little thing. The migraines, I don't think started happening for 3 or 4 months after the accident. There were other things that happened immediately, but the migraines, they went on for a long period of time. So go to the hospital, and then also don't try to settle a bodily injury thing on your own because there's rules that you need to know. I would have been left carrying a lot of the thing had I not had somebody representing me and help me understand the rules for the coverage. So I only throw that out there to help you all make good decisions on things that we don't always talk about.
Yeah, that's a good word.
Good word. All for today.
Well, everybody have an enjoyable weekend. You might have Martin Luther King Day off, or you might be working, but it's a good time to Google a couple top things about Martin Luther King and maybe reflect on those and his virtues and character and share those with a couple people too.
Thank you.
All right. It's good to see you all. Hope you have a great weekend.
Likewise.